Hi guys, Ken Chigbo aka KenFX3 back with another week roundup and look ahead to the key events. Now last week really was about risk appetite. You know, I've been talking about this for weeks. Markets are hungry for risk. The riskier FX, Euro, AUD, NZD, GBP, dollar has been down, whereas its peers have been rallying because markets are hungry for risk. Why? Improving economic data points. Like last week, we had really good manufacturing PMIs actually from the Eurozone. We still continue to see good data for likes of China, Australia, New Zealand, all very encouraging for the global economic rebound for growth, right? And then, of course, we had a little bit of Brexit optimism. We still got vaccine optimism. All of this is helping drive forward the riskier currencies. Now, if you take a look here, right, the dollar index, this is the dollar. Last week, we broke out aggressively to the downside from this narrowing pennant structure, okay, making way for some further downside. Now, for me, I'm looking for that to continue this week. I still want to see risk appetite. This is another thing, actually. The FOMC, so the Central Bank of the United States, they maintain their dovish stance. Okay, so they're going to continue to pump loads of money into the economy, quantitative easing. So that will weaken USD. And then also we've got optimism around a COVID-19 relief bill from US politicians. So let's just take a look at what I'm looking at this week. Euro, okay, bit of consolidation here via the 4-hour chart. I'm looking for this, obviously we've made ourselves comfortable around this nice psychological 2150 area. I'm looking for us to break out to the upside, and my eyes are locked in on 2300. And if you look just above here, we'll be looking at 2450. So some really nice upside to come here for euro dollar. With gold prices, XAU USD supported by dovish FOMC. Got a bit of a flag structure here, which again, I'm looking for some buying from around these current areas, around sort of 1880. Upside target would be back firmly above 1900 in towards 1910. I also like, as I've said for a number of weeks now, I like the looks of AUD and NZD. We had good labour market data, so good jobs data from Australia last week. And you can see we bounced off this 38.2% Fibonacci and breaking out of this flag structure. So buying, again, of interest from here. With targets this week, I believe we can hit this 76, 75 area, so another sort of 50 pips or so to the upside. As with NZD as well, this one presenting a bit more of an opportunity. So buying from this current area, sort of 71, 35, 30. There's a lot of support here for a breakout for the flag to the upside, and I'll be looking at targets of 7200. Remember, I really like AUD and NZD because China's improving, Australia and New Zealand economies are improving, and they've done well really containing the virus in comparison to other major economies. So that's pretty much, I believe that's everything on my watch list this week. One last thing, still some upside here for US stocks, US 30. I want to see that 30,500 mark being achieved this week. So very much just to summarize it again about risk appetite. So dollar weakness, but then dollar pairs, Euro, Aussie, NZD, GBP, all rallying. But just be careful with GBP because we're still looking out for an update on Brexit at the moment. Other than that, that's it from me. Thank you very much.